Klaytn is the high flyer
of the week.
Before Klaytn went up those 7%, it went down by 97%. Now one might argue, okay, we are in a bear market and so everything is going down, so Klaytn went down as well. But the issue is Klaytn went down not just in terms of US dollars, Klaytn relative to Ethereum, relative to Bitcoin, went down much more. It appears as if the price is pretty much at similar levels to where we started in October of 2019. But the issue is, relative to Bitcoin and Ethereum, this chart looks very different. This is Klaytn divided by Ethereum. So Klaytn's price development relative to Ethereum. It's a very constant bleed. But it's interesting that here not the regular problem with altcoins is occurring. Usually altcoins do that poorly versus Bitcoin and Ethereum because of an ever expanding supply, because the number of circulating tokens is increasing that much. That's not the case for Klaytn. Klaytn only got a supply increase by 3.13% in the last 12 months. That's not much at all for an altcoin. The problem for Klaytn are things like this: the number of Twitter followers going down and the total value locked on chain ever declining very constantly. So the reason for all of this downward pressure is simply little adoption. The layer 1 smart contract space is hyper competitive. There are more than 200 now tracked by DeFi Llama, and Klaytn cannot carve out its unique niche. During the last 2 years, the maximum temporary rally we have seen in Klaytn was a bit under 100%. But that stands in comparison to this very constant downwards trend. Now, I'm not here just to bash on cryptocurrencies. Sometimes the opportunity is just in plain sight. We don't have to necessarily buy Klaytn, right? You don't have to buy and try to time those short-term rallies. I think the better way is to bet on falling prices. Simply just bet on the current trend to continue, right? That's much more likely. There are two potential problems with this though, right? The first one is, where can we open a short? Where can we bet on falling Klaytn prices? The second problem is, whenever we bet on falling prices, the losses are pretty much unlimited, because once the price shoots up, then you might get forced liquidated. So risk management in shorting, in betting on falling prices, is very, very important. Where do we put the stop loss in case Klaytn doesn't go down further? Here's the answer to question number 1. Where can we short this? So you go to CoinGecko, you go to markets, and then you click on perpetuals. And here you see the 24-hour volume and the open interest for various centralized exchanges. So you can bet on falling prices of Klaytn on Bybit or on OKX or on Binance or on KuCoin. Maxi and Gate.io and BitMEX also offer this. Pretty much all of the centralized exchanges offer betting on falling prices of Klaytn. Now, answering the second question, how to manage risk here, how to manage a stop loss, isn't that straightforward. I personally prefer to use somewhat objective approaches. Approaches that historically worked well in the past and that I can quantify to a degree. And since we are betting on a falling price, we are betting on the current trend to prevail, we have to find a way to distinguish when is Klaytn going up and when is it going down. We have to figure a way how to determine those trend movements. And so I did what I regularly do on this channel. I did a backtest, a simulation of buying and selling the Klaytn token, trying to find out if we use a moving average to determine these trends, what's the best moving average duration. So the idea is to bet on falling prices whenever the price is below the moving average, and to bet on rising prices whenever the price is above the moving average. And we want to find out, should we take the 50-day moving average? Should we take the 100-day moving average? Or maybe the 150-day? What's the best moving average here? At least what was the best moving average in the past? And so here we go. This is my magical macro-enabled Excel sheet, starting with data in April of 2020 all the way to today. We've got 0.2% trading fees, and we bet on rising prices whenever the price is above the moving average, and we bet on falling prices whenever it's below. And we backtest the simple moving average and the exponential moving average depending on the duration. So these are daily prices. And let's look at this in chart form. So the same data. On the x-axis is the moving average duration. On the y-axis is the annualized performance. The best simple moving average is the 17-day. Another great one is the 32-day. And the best exponential moving average is the 17-day. So let's maybe look at those two. the 17-day exponential moving average, and the 33-day SMA. Here's the return over time. So in white, we've got the Klaytn price. In turquoise, we've got the back-tested return. This is a linear scale. Here we've got the same on a logarithmic scale. So we are making money. We're betting on falling prices while Klaytn is going down. And the delta here is pretty massive, right? We can barely see the price movements of Klaytn because it's that small already compared to our back-tested portfolio. Then the same here for the EMA, the 17-day, here on a logarithmic scale. So let's look at this on the price chart. So there we go. We've got, again, the simple moving average in turquoise, the exponential moving average in red. We are betting on falling prices whenever the price is below both. We're betting on rising whenever it's above. And currently, we are rather bullish, interestingly enough, because of this positive price movement in the last few days. In other words, if the backtest is any indication, if it shows us any kind of reliable information, which I do think it does, because first of all, this approach tends to work for a lot of altcoins. Secondly, when we look at the results specifically to Klaytn, we can see how many moving averages just outperform buying and holding, right? Buying and holding here is in black. So pretty much if you didn't just take 1 or 2 days in moving average where you then get a lot of trading fees, if you take something a little bit longer, you tend to outperform just buying and holding. Because of those two reasons, I think this is a relatively solid strategy. It's not a perfect strategy. We do have our fake outs. Sometimes we move across those moving averages randomly, but overall it does perform better than just buying and holding. And so right now it does seem to make sense to hold off with shorting Klaytn. But again, long term, there is not a lot of adoption, right? Long term, this seems to be somewhat of a dead project. I don't think it's a good idea to buy here, but it is probably a good idea to wait for a while to short. And currently, the price limits are 11.7 cents for the SMA and 12.2 cents for the EMA. We have to fall below this in order to make Klaytn a viable short again, to then go to any of those centralized exchanges to bet on falling prices. Right, so this is how I see this. In crypto, the trend is really your friend. Whatever used to fall in the past tends to continue to fall further. Whatever was rising in the past tends to continue to rise. Not 100%, right? Sometimes trends shift, but overall this is the safer side to be on. So be careful out there. Don't just buy a falling knife. Don't just buy the current hype. Instead, try to follow somewhat of an objective approach that's quantifiable. Feel free to join our Telegram. Link is down below.